You're listening to the Unlocking Africa podcast.
I did my MBA at INSEAD in France, and then after that joined McKinsey, the business consulting firm, for 4 years. I was part of the Milano office, but worked a lot in Egypt, in the Middle East. So after 10 years in total of running a business in Egypt, I exited the business, and then I went did another master's degree at Stanford in California. Things that makes working in Africa not so easy is sometimes the banking system is not as forgiving as banks in Europe. The opportunities of doing business in Africa is really big if you are able to navigate the African way of doing business, if I may say.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we find amazing people who are doing amazing things to unlock Africa's economic potential. Today, we have Ibrahim Abdel Rahim, who is managing partner at Moonbase Capital, who invest in SMEs through search funds, which is an innovative new asset class that combines the stability of private equity with the agility of venture capital. Welcome to the podcast, Ibrahim. How are you?
I'm doing great. Very excited to be on your podcast. Thanks for having me.
Fantastic. So how's your day been so far?
Been great. In Barcelona, the weather is nice today, so it's been a good day.
Brilliant. Before we get started, tell us a bit more about Ibrahim Abdel Rahim.
So I am Egyptian. I was born and raised in Cairo in Egypt. My family has a family business. So I grew up excited to work in an Egyptian family business. We produce flavors and fragrances, so ingredients, which we export to a number of different African and Middle Eastern countries. So I joined the family business as a young kid, and then I left after 4 years to learn business properly. So I did my MBA at INSEAD in France. And then after that joined McKinsey, the business consulting firm, McKinsey & Company, joined them for 4 years. I was part of the Milano office, but worked a lot in Egypt, in the Middle East, and in different countries. And then eventually went back to the family business, worked there for 4 years, growing it, and then sold it to a German multinational called Döhler, and stayed as CEO of Döhler Egypt for another 6 years. So after 10 years in total of running a business in Egypt, we exited the business. And then I went did another master's degree at Stanford in California. This was 2019, 2020. And that is where I learned about search funds, because Stanford is the place where search funds were born back in the 80s. I was really hooked because search funds is a way to invest in SMEs, small and medium-sized companies. And since this is the type of asset class I was working in my whole life, and my father's family business was in this size bracket, I felt this is the place where I want to grow and invest. And that's what I do now. I invest in SMEs through this thing called search funds.
Fantastic. So you've given us great insight into your personal and professional life in terms of qualifications, working as a consultant, and also running the family business in Egypt. So I was wondering if you could share more about your early career managing your family business in Egypt. What valuable lessons do you think you learned during that time?
I mean, the one thing which stuck with me was the fact that people in Egypt are really good and very talented if you put them in the right atmosphere. So usually when you talk about human aspect or the human resources or the people in different African countries, you always get skeptical. People from Europe are always skeptical, saying, it's not so easy to work in Egypt because maybe the people are not as educated, or it's harder to manage them because of different reasons. And you always have this stigma. What I learned is actually, although I see it in many organizations in Africa or in Egypt specifically, where they're not that well run, not that well managed, but then doing it myself and applying European management systems, what I've seen is that people need a direction. And if you are able to do the right atmosphere where they're excited, they become way better than even what I've seen in other countries. I mean, to survive in Egypt, or I guess in many other African countries, you need to be quite street smart. It's hard. It's harder than surviving in Europe for sure. So by default, the people have some qualities that maybe Europeans don't have. But unless they're in the right the right atmosphere, and they're excited, these qualities could be hard to manage. And that's why many people say, yeah, it's maybe hard to manage a business in Egypt. But what I've seen is it's true. But if you are the right leader, and if the leadership is good, the people are really good. And what ends up happening is you can perform even better than what you would do in Europe because of the power they have, So this for me was the biggest learning from my 15 years working in SMEs in Egypt.
Brilliant. So I guess the main point there is applying the right management systems in Africa within a business does enable it to grow or increase the chances of it growing and becoming sustainable, which is something you managed to achieve through your family business. So you took over the family business, you grew it to a considerable size and then sold it to a German company.
Yes.
Were there specific challenges or opportunities that you saw that led you to the decision of selling and exiting the company?
So in the business we were in is juice concentrates. So in juice concentrates, what you do is you buy fruits and you squeeze these fruits into a pulp or a juice, and then you sell this juice to manufacturers of drinks and nectars and the people who do the finished goods. In our business, you need a lot of investments because basically you buy, let's say, mangoes. So one of the fruits we did was mangoes. We used to buy during August when the season of mangoes is at its peak. We used to buy a lot of mangoes and we have to pay it. But then you sell your juice over the whole year because people drink mango juice the whole year. They don't only drink it in August, which means that by default, we always had to have a very big loan from the banks. Now, one of the things that makes working in Africa not so easy is sometimes the banking system is not as forgiving as banks in Europe, which meant it's very expensive to get the loans. They make you sign very tough papers. So working with and growing depending on the banks was not the best. So selling to a European multinational was a good idea because you can grow when they put their money themselves as a very cash-rich company. And we were able to grow much faster and much bigger given the liquidity of this mother company. Plus also the name of a German multinational makes it easier to sell, especially in Africa and in the Middle East and the Mediterranean, because the German brand is so powerful. And unfortunately, another thing about at least Egypt is we really like these big European brands. We trust them more than we actually trust our own brands. So this also was another reason why selling to a German company made sense.
Interesting. Earlier, you also mentioned in terms of prior to working with a family business, you spent time in consulting. So what key insights or skills did you gain from that part of your professional career that you find are valuable in your current role as a managing partner at Moonbase Capital?
Consulting is a huge learning opportunity in general, because every few months you are in a company solving a new issue, which is usually something tough because you would not hire an external consultant unless it is something worth really solving for. So the learning is so steep. You're working, especially at McKinsey, you work with CEOs and you work with the board to do a strategy or to merge two companies or to do a reorganization. So I learned so much about business in general from my consulting years, which now I'm applying when I invest in an SME. And the way we do it at Moonbase is we work a lot with the searchers who are looking for a company to buy, and then they become CEOs, and we help them and advise them, and we sit on the board. So all these learnings as a consultant helps me not only in identifying a problem, but also in being able to find the solution and being able to communicate it in a way that the team would buy into and people would move into that direction. So consulting, I mean, in general, is a very good learning for anyone who wants to know business.
Fantastic. So you've taken your learnings as a consultant to what you do at Moonbase Capital. So we know that Moonbase Capital specializes on search funds. So could you explain what search funds are and how you first came across this innovative asset class whilst you were in Silicon Valley?
Search funds is a concept that was started at Stanford in the mid-'80s by a professor called Irv Krusbeck. And he found that many of his students and the MBA students would like to take on an entrepreneurial role, but don't want to do a startup. They don't have an idea and they don't like the startup process. So they worked with Irv to work on looking for an SME, a small company that they can buy and manage. And that's what they started. So mid-'80s, a few of his students, he helped them fund from a number of investors money for 2 years of searching for a company. So first step, we work with these entrepreneurs and we fund for them the search phase. And we don't do it as Moonbase on our own. We work with a lot of other investors that co-invest in helping this entrepreneur in spending 2 years looking through a database, starting with a database, then sending emails to thousands of SMEs, and then sitting with these SME owners and convincing them to sell their businesses. And the businesses we invest in, or this searcher looks for, have very specific criteria, which are size of EBITDA of 1 to 5 million euros. So you're talking about an SME, a small company. You talk about it's usually in the either services or the B2B realm, because we look for companies that don't need CapEx to grow. So you don't need to keep fueling it with more and more money in order to grow. We look for companies that have a recurring revenue, so some sort of contract. So it's a very safe investment. And usually these companies are companies where you had a founder, a father or a mother or a father and mother who were working together for 30 years building this company. So we're talking not about startups, we're talking about regular mom and pop, typical SMEs that exist all over the world. I mean, you talk about here in Europe, more than 50% of the GDP is made up of SMEs.
Yes.
So it's a huge amount of the companies. But we look for companies that are very safe, that have been very successful for many years, so that the risk is very low. And then once the searcher or the entrepreneur locates and finds this company, next step would be to decide if we want to invest in this company or not. So we work in the 2 years with this entrepreneur. And then after they find the company, we decide. If we don't want to invest, we leave as Moonbase and someone else takes our place. But if we decide to invest, usually we invest around 500,000 to 1 million euros. And we take maybe anywhere between 5 and 10, 15% of the company. In many cases, we take a board seat, and then the entrepreneur becomes the CEO of this SME. The banks here in Europe usually put around 60% of the value of the company, and we as investors put the rest. So we end up during the first 5 years using all the cash flow to pay the banks back their money. So after 5 years of running this company successfully, you have a debt-free company that we bought for a good price and that the bank paid a lot of it. And now you are exiting a bigger company with no debt. And usually the returns that Stanford has been documenting for the past 30 years has been around 30% return IRR for the search funds. So it's a huge IRR, which means basically annual return on average.
Yes.
So it's a huge return, higher than the average for venture capital, higher than the average for private equity, for the stock market. So it's a very interesting asset class where you have a very high return, and yet the risk is not as high as you see in venture capital. So it's and it's growing really big in Europe. It's already quite established in the US, and it's growing also in Africa. I mean, in Egypt, there are 2 searchers now who are searching for companies, and then a number of other African countries, you have people looking for SMEs to buy. And in Africa, it's very relevant because we are countries that has a lot of SMEs.
Yes.
I mean, maybe 1 to 5 million euros, we don't really consider it as an SME in Africa. It's quite big, a 5 million euro.
Very true.
EBITDA in Egypt is a big company, but still you have a lot of these companies which have a lot of potential, and you have family members who grew this business. They're well off because the business is successful, but their kids don't want to work in this business anymore. So you have a vacuum, and you have a case where these parents or these founders want to sell to a young entrepreneur who would like to still keep the business alive and grow it and take it to the next level. So it's very exciting, very exciting. You work with these guys. I mean, I always say it has the best of venture capital and private equity, because you have, from the venture capital world, you have 2 things which really define venture capital. You have the fact that you work with entrepreneurs, which is really the essence of a venture capital deal. So you have the entrepreneurs, but in our case, they don't start, they go and buy a company. And you have, because it's small tickets and you only buy 5 to 10% of the company, you end up having a very good diversified portfolio. So you enter into a lot of small tickets. Now, the difference is in venture capital, you do that because it's very risky. In our case, you do that and the risk is not that high, which is one of the reasons why you have that big of a return. So that's from the venture capital side. On the private equity side, you also have the 2 really things that make up private equity. One is the leverage. the fact that you go to the bank and the bank helps you buy this company. And the other thing is that you're buying a company that exists, that you can go visit, you can see the performance over the past years, you can go visit the clients, which makes it much, much less risky than a startup. So combining these two in the search fund is what makes search funds so special.
Fantastic. So you've touched on this slightly, but I wanted to see if we can go into a bit more detail. What unique advantage does this approach offer SMEs compared to, say, traditional private equity or venture capital investment?
The companies we go and approach are companies where the founder is creating a brick and mortar, regular, old school, if you want to call it. Some people even call it boring, a business, which is a business that's safe and slowly growing.
Yes.
So it's not a venture capital startup style business, which you are trying to aim for creating a unicorn or a 1 billion euro valuated company. You're more looking for brick and mortar regular companies. And the owners of these companies like to work with search fund investors because they don't want a private equity individual to come and manage them and give them targets. Because usually if a private equity goes and buys a company, they will never accept that the CEO leaves the company before maybe 5 years. And if you're a well-off SME founder that's been your own boss for 30 years, it's not easy for you to have a young private equity associate on your board and telling you what to do. So our value proposition is you go to these companies that don't fit the venture capital world, but instead of working with private equity people, you work with a fellow or a son or the daughter that you never had, because you have a young entrepreneur that wants to take over your business, and this entrepreneur will become the CEO, and you work with this entrepreneur personally. So there's more of a good transition to like a son, that this founder never had. And this is the real value proposition that neither private equity or venture capital can offer to an SME like this.
I like that. So you've detailed the advantage this approach has in comparison to private equity or venture capital investment. So looking at some of the companies that you've worked with, are there any notable success stories or case studies of SMEs in Africa that Moonbase Capital has been involved with that you can share with us?
So Moonbase is working more in Europe. So our investment is mainly in Europe. However, search funds are quite new in Africa. So there has been a lot of successes in SMEs, like our family business, for example, which grew from an SME to and being sold to a multinational. However, in the search fund world, it's still a new world. So there are searchers in different countries. They did acquisitions in different countries, but it's still early to judge on the success of the outcome of these deals. You can see that they bought good companies, but they didn't exit yet. So it's hard to comment on that. That said, you can clearly see that the model is working. There's a lot of SMEs. There is movement, but I cannot quote a specific success yet in Africa.
Okay. So how new would you say this type of investment approach is in Africa?
Very new, very new. I mean, there has only been investments in this field in Africa. I mean, I don't know the exact number, but maybe in 4 years ago, 5 years ago, that's when it started. And it started, I think, in South Africa was the first searcher. In Egypt, it only started a year and a half ago. So it's quite new. In Egypt, they still are searching for companies. So they didn't even yet acquire. And in Africa, it's a bit more tricky than Europe because of the lending environment. It depends on the country, of course. You cannot generalize. But in many African countries, to have a bank finance an M&A deal for you is not so standard. So it is not so easy to get financing the way you would get it in Europe. That said, you have very good SMEs that have great potential to grow. So you can still have good deals, but you will not depend on the leverage. You don't depend on the fact that you will pay back the debt and make your return. You need to depend on the fact that you can grow a lot and sell a lot and create, and exit a much bigger company. So you make up for no leverage by growth. And this we've seen in Latin America work very successfully. So in Latin America, also the banks don't really support. In many cases, like Brazil, for example, or Mexico, maybe you can get 10%, 20%, but not more than that from the banks. However, we've seen really good returns because they bought cheap companies, very small, with a very big growth potential, which they maximized. So I think the model will work really well in Africa. That said, if banks and if the regulation will help buy small companies, it will really boost this search fund world a lot. And Africa needs it because if you think about it, SMEs is our core. I mean, I saw before a number that said in Egypt, you have around 80% of the GDP is made up of SMEs. So it's a big number of the economy. And many of those die off if the founder grows and does not have any succession plan. The company eventually dies. And for Africa to boost these companies and grow them into bigger multinational type companies would be very beneficial for the country. So I hope that banks start supporting and that the whole environment is created to boost search funds in Africa.
Thank you for sharing that. Earlier, you mentioned Moonbase Capital aims to provide consistent returns with lower risk. In an Africa context, what strategies or practices would you employ to achieve this?
The first step is to make sure that the entrepreneurs or the searchers who are looking for companies in Africa are looking for the right targets. Because in Europe, it is easy to find a company that has 3 million euros of EBITDA and only has 15 or 20 employees. Now, in Africa, if you get a 3 million euro EBITDA company, probably it will have much more employees. It will be a much bigger entity, let's say. So I think the first step is to make sure that you choose a company or that the searcher chooses a company that is not that hard to manage and has all the criteria of a search fund. So it's a secure investment. It's very safe. It has a good track record. It has recurring revenue. It has good margins. So at least 15% EBITDA margins. And once you find such a company, I think it will be easy for the searchers who are usually very well educated individuals with a lot of potential to take this company that's easy to manage and grow it. And I think searching and finding the proper company is a huge thing, because if you get into a very hard company to manage in Africa, would be hard. You can find some skeletons in the closet that would be hard to fix. But if you find the right target and you have a founder that's willing to help and willing to support, I think the sky is the limit. So I would say find the right company, and then Africa is a very good environment to succeed without anything else.
You touched on something quite key there, which is find the right company. So how do you assess the potential of SMEs in terms of scalability and market reach?
We work close with the founders to understand their own plans, and we look for experts in the field that know the sector that we're buying in. And with the searcher, or the searcher is the one usually that does this exercise, but we help them in creating a strategy for this company and thinking out of the box. How can we take this company, spend a year or two to understand the sector more and maybe not do too many changes in the first year or two, but then eventually be able to enter new companies, businesses, maybe buy another company and merge it to the first one. There's a lot of strategies. I mean, one strategy is M&A, where you buy one company, grow it a bit, fix it, and then buy during these first 5-6 years, 2 or 3 other companies. So that's one way to grow. And another way to grow is by focusing on sales and business development and being a bit more innovative and start growing the sales of this company as much as you can. So these are the 2 different ways that people do it, and both work as well. I mean, in Africa, I think it will be more the growth idea, basically focusing on business development, focusing on proper products and a proper pricing in order to penetrate the African markets, maybe countries around Africa as well. So this would be the go-to strategy, because M&A in our region has not been as entrenched in the business world as it is in the US, for example. The US M&A is a main way to grow. In our countries, because of the banking sector and because we're not yet used to going and buying companies. And so it's, I think, in our case, focusing on business development, innovation, and growth would be the go-to method, I'd say.
Fantastic. So if we go into a bit more detail regarding this, can you walk us through, say, a standard or your typical process that you'd follow when evaluating potential SME investments?
Sure. I mean, let me step back. First due diligence we do is on the searcher himself, because first step is the searcher comes to us and says, I am a potential CEO in France, for example, or in Egypt, or in any country, and I have experience there, and I would like to work with Moonbase to look for a company. And here we have a good due diligence of this person himself, education, the drive, the ambition. We have a number of interviews and case studies to make sure that this person has what it takes to eventually grow and run an SME, especially that they've never been CEOs before. These guys are well educated. Many times they have MBAs in top schools or worked in consulting or investment banking, private equity in Europe. So they're usually high caliber people. And then during the 2 years after we sign with them, we work quite closely with them. So the first due diligence, I would say, is on the person himself.
Yes.
And then after that, once this person finds a company, we start very early on in giving our opinion on the sector, on the company. And the due diligence is done mainly by the searcher. However, the searcher is working with maybe 10 or 15 investors like Moonbase, and all of us help the searcher the way we can best, which is the brilliance of this model. Because let's say a searcher now finds a company in the automotive sector doing some service for the automotive manufacturers. Now, on their cap table, they will have investors who are experienced in private equity, investors who are experienced in M&A, so negotiations, investors who are experienced in the country itself. Let's say they're doing this deal in Rwanda, then they would have experience in the country. They would have experience in strategy in the sector, in automotive. So what they do is they work with all these investors in different parts of the due diligence in order to make sure that the company can really understand well the company and what they can grow with it. Now, the beauty of search funds is there are very clear criteria that we follow. So we don't reinvent the wheel every time. We're looking for companies with a certain EBITDA size, with a certain EBITDA margins. We make sure that the industry is an industry with tailwinds, so not a dying industry. We make sure that the industry it's a fragmented industry, so we don't look for an industry where you have a fellow competitor that's very big and it will be hard to compete. So usually it's a very fragmented industry. We're looking for a recurring revenue. So it's an industry where you have contracts going into 2 or 3 years to make sure that they're very safe. So the criteria we follow is set by Stanford and Harvard 30 years ago, and it has proven over the years to be very useful, and we follow them. Once we find the company with all this criteria, then the searcher hires one of the big accounting firms, legal firms to do different due diligences. So we hire KPMG or we hire one of those big firms to do a due diligence for this SME. And then we, as investors, the 15 different investors, take this report, study it, work with the searcher, ask questions, talk with the auditors. So we really start from this report, understanding the company and working with it. But the beauty of this is because the searcher is the one who does the due diligence with the auditors or with the accountants and with the lawyers, we don't have to personally be involved in the details of each of those investments, which allow us to do multiple investments. I mean, in Moonbase's case, we want to invest 15 million euros into around 25 companies. So we aim to do maybe around 7, 8, 9 investments every year over the first 3 years. So in order to do that, you need to make sure that someone else takes care of the due diligence and you are more studying whether you want to invest in this or not, versus doing it yourself and hiring the CEO yourself and doing everything yourself. So the due diligence is led by the searcher and supported by all the different investors. And this is why, I mean, in Moonbase this year, we've done around one deal every month and a half. So there's no way to be able to do a deal every month and a half if you do everything yourself. And this is the beauty of the model.
During that, you gave an example of a searcher, say for instance, finding an opportunity in the automotive industry. So what sectors or industries do you believe hold the most promise for search funds in Africa, and why?
So the beauty of search funds is it is really industry agnostic. So we work in such a variety and such a big span of industries. However, it always usually ends up either services or B2B. So let's say, for example, an industry like, stay with automotive, we would never do like a heavy manufacturing for the automotive industry because it requires CapEx, or we would never do something that sells to end products because you need to do marketing and you need to do distribution. And so we don't do this stuff, but we could do a service. For example, we are investing now in a company that is sharpening the tools for automotive. Is one of the industries we sharpen the tools for. So for example, if you're an automotive manufacturer, you have tools that are cutting different plastic or iron or something. These tools need to be sharpened every now and then. So we can invest in a company that does a service, which is sharpening tools for example, the automotive industry. So we work with a huge, I think all industries, but we only choose either services or B2B, because these are the ones that end up fitting the Stanford and Harvard criteria, which we are always, as an industry, following. So yeah, there's so many sectors. I cannot name a certain sector. However, we choose the safe service B2B from all these sectors. In Africa, the service industry is a bit smaller than what you find in Europe, because usually the big industries are capital intensive, but however, you can always find. So we aim to always, it's very important to stay with that, because if you go and invest in a capex heavy, for example, industry, what happens is you cannot grow it, because you need to keep putting money in order to grow. Now, private equities and venture capital are built towards that. But search funds is an area where the investors will put a small sum of money. Many of them will put a small sum of money once, and they don't want to keep fueling this growth of the company. For example, if you have a very small EBITDA margin, it won't work for us, because we like to work with banks. And if you have a small EBITDA margin, you will not be able to pay back the loan. So at the end of the day, we work more in services with this criteria, but in a very wide range of sectors.
Thank you for that. You mentioned that search funds are sector agnostic, which means that the investment approach must be stable and agile. So how do you strike a balance between these two factors in your investment decisions?
Well, very good question. Most of them are stable by default, because they are owned or managed by founders who's been running this for the past, maybe in some cases 30, 40 years, maybe it's second generation or third generation even. And these families usually do things in a very specific way. So it's very stable in that regard. What we do is we enter the business, or the CEO or the entrepreneur enters the business, takes over the company, and stays with the stability for maybe 2 years. And during these 2 years, they try to learn, and they try to not do any sudden movements, because they're not from the sector. Our entrepreneurs go to sectors that they never worked in before. So it would be very foolish to go on day one and start doing very massive change, before you have the experience. So stability is always the first part of the deal. And in many cases, it is more stable than agile. Now, in some cases, what you do is after you learn 2 years, you start inventing new ways to grow this business. M&A is one way, which is usually very agile and very innovative, where you start buying other companies that are smaller than this SME, and then build your growth strategy through M&A, through mergers and acquisitions. Another way is to enter into a new field, grow the product range, do things that the old or the original founders never did. So you need to have this agile mentality. However, it's very risky to go to a company like this and be too agile too early on. So I would say we balance it through the process, where it starts off quite stable. And then the more you know about the industry, the more agile, and the more you try to do things innovatively, and you change things around. But it comes with the time. So it's more of a process rather than you choose either that or that. You do both depending on the time of where you are in the process, basically.
Thank you for that. So you mentioned that the entrepreneurs enter the business and take over for at least 2 years. I guess this approach requires close support and guidance. So what would you say is the importance of mentorship and guidance for entrepreneurs in the context of, say, search fund investment?
It is extremely important. The magic happens because you have 3 things that come together. So one, you have a brilliant entrepreneur who has great potential, but only potential, because they were not necessarily knowledgeable of everything it takes to do a search fund, but they are very good potential. So that's one part of the equation. Now, the other part of the equation is finding a company that is stable and safe and has good potential as well. So the other part is to make sure that you follow the criteria and get the right company. And then the third part is the investors. And without this third part, it does not work. And the reason is the part which you just said, which is mentorship, not the money aspect, because money is available. You could get money from different areas, but the mentorship is so important. And the reason is, in the search fund, the entrepreneur is asked to do a lot of tasks that no one person can do. You start off by building a database of potential companies to buy, and then you talk to them, and then you have to negotiate a deal. And so it's more of an M&A private equity start. And then after that, you need to be a CEO. and CEO of a small company, which means you need to personally work on sales and personally work on marketing. I mean, you will hire a team, of course, and there is a team, but it's given that it's an SME, you as a CEO need to be very available and very hands-on. Now, given that a typical search fund would have maybe 15 investors, this is how this is solved. When a searcher is building their cap table, they choose investors with this view. So they say, okay, I need 2 or 3 people who know private equity really well. I need 2 or 3 people who ran companies in the country I'm going to find the company in. I need 2 or 3 people that knows business and know strategy and know operations. So they choose their investors very carefully, not based on the money, but more based on what they can offer the searcher and what mentorship they can. And during the 2 years, the searcher gets quite close to some of his investors, not all of them, because, for example, Moonbase, we work really close to our searchers and we like to help them as much as possible. We have an advisory team of 50 people that support these searchers when needed. Other investors, they maybe don't work so close to them, but they are private equity gurus. So when the searcher needs anything in the private equity world, they contact them and they ask them, and these investors always help them. And the beauty of the search fund world is that the investors and entrepreneurs are very close and very well. It's well knit community in general. So people are very helpful, and mentorship is a main part that the searchers work with different investors based on what they need. And without it would never work, because there is no searcher that can do this whole task from locating and negotiating and closing a deal and then running a business and exiting it, and no one can do it alone. So in our case, mentorship is extremely important. It's really what makes this thing whole work.
Awesome. So we've touched on this in terms of mentorship. So beyond the initial investment phase, how does Moonbase Capital support the growth and development of the companies it invests in?
We serve on the boards of not all, but more than half of the investments. We are part of the board, and either one of the GPs, or either myself or one of us, one of Moonbase, is representing Moonbase on the board. Or in some cases, we can have one of our investors who knows the sector, or one of our advisors who know the sectors, if they can add more value. But we are on the board is what we do. And we, as board members, consider ourselves team players. So we do what's needed in order to help the company grow. This could mean doing a workshop for one function in the company, or do extra meetings with the CEO to help in a certain topic, or getting an advisor. So what we do is we either help on the board, or anytime we're called upon, we help a lot. Usually the board are the ones who are closest to the searcher, because once the searcher is the CEO, they also are very busy running the business. And if they deal with 15 different investors one by one, they would be overwhelmed. They would be working more with the investors rather than in the market. So usually the board are the ones that are closest. So the businesses where we are on the board, we're very, very involved. The ones where we're not on the board, we have a quarterly meeting. We see if we can help, but these are the ones where we usually are not as close as the ones where we're on the board.
Brilliant. So I guess if we bring this back to our discussions about SMEs in Africa, given your experience in doing business in North Africa and exporting to the rest of the continent and the rest of the world, what are some of the key opportunities you've observed for SMEs in the region?
It's hard to tell, because Africa is a great place to grow a business from a market perspective, because the competition is not that fierce like you see in the West, for example. And the market is big. I mean, Africa is, a huge part of the world, more than people recognize. So if you are selling something that different people in Africa need, you have a very big market, and you don't have that much competition. Even Europeans and Western companies usually struggle to grow in Africa. I mean, some are very successful, but it's not that easy for them. It's a very different culture. It's also, Africa is so many different countries that are very different. So it's not like Europe, for example, where countries are somewhat attached. You tackle a lot of countries. I cannot pinpoint an opportunity in a certain sector, but what I can say is there is a very big market. There is a lot of needs that need to be fulfilled and filled by companies. And there is a lot of hardships which make people who can navigate these hardships very successful. So some multinationals struggle in Africa because the way to do business is different. The way to deal with the culture is different. The way to understand the needs of the consumer is different. Now, if you are someone from Africa and someone who knows the market and knows the consumer and know how to navigate and work with the government and work with the municipalities, and you're able to navigate this world, and you're well educated, that you can compete and can create a company that is well managed, you can really reach huge highs. And there is a lot of examples, business people in Africa that succeeded after learning how to do business and after creating a product that was successful in other markets, bring it back to Africa and growing it. So I would say the opportunities of doing business in Africa is really big. And there is a lot of things you can do if you are able to provide the product that solves the need, that you can manage a company really well and navigate the African way of doing business, if I may say.
You touched on in terms of there are a lot of needs that need to be fulfilled in a range of African markets. We know that one of those needs is obviously access to capital. So are there any specific trends that you're seeing in the search fund space that you're excited about that you think would be a benefit to African SMEs?
I mean, I wouldn't say that, no, I don't see a specific trend. I mean, if you are able to get your hands on proper financing in Africa, either through family offices that you work with or wealthy entrepreneurs or CEOs, previous CEOs that want to invest but have no time or don't know what to invest, it will push you a lot, because getting investments and getting financing in Africa is quite a challenge for SMEs. It's not that big a challenge for startups, for example, because startups, there is a lot of venture capital that's growing like crazy in Africa. There is a lot of angel investing and people are really willing to put money in these startups. However, SMEs is different, because in startups, you take the risk of putting your money, and if it succeeds, you make a huge return, and if it doesn't succeed, you're okay with it. But in SMEs, you don't have this huge return that you expect. It will not build into a unicorn. It will be a good business, it will grow. But SMEs suffer a lot in this whole financing world. They don't get, banks are very tough on SMEs. Banks are much easier to give to big entities, either multinational or local entities that are of a certain size. But SMEs suffer in Africa quite a bit. Of course, I say in Africa broadly, but some countries are not as much as others. Now, so I would say financing is one of the things that, if someone has good contacts, people that trust them and can get the right investments for a business, they will be quite ahead, because that's a place where many struggle, and many are talented, have good ideas, but they don't get the right financing to grow a business. And financing is a main element of succeeding in business, whether it's equity through people who will invest their own money, or debt, if you can get it from the bank, if you have connections, or if you live in a country where banks will help you easily. But I would say financing is one thing which make a big difference in Africa, because it's lacking a bit.
I agree. So how do you see the search fund space in Africa evolving in the next, say, 5 years' time?
Unfortunately, I think it will not evolve as quickly as it did in the West. And the reason is two things, actually. One is the fact that it's built around entrepreneurs. And these entrepreneurs or searchers are people usually, or at least in Europe, are people who do top MBAs in top schools, who have experience in top firms, or these very, let's say, talented with big potential employees. Now, Africa, we have such calibers, of course. Not as many as the West, but we have quite a bit. The problem is that many of them choose to do something other than entrepreneurship in Africa. So many of them either stay in Europe or go back to Africa in a multinational company, or go back in a big position. Because there is not so many of them, you can choose and you can have these choices. So unfortunately, the first step in search funds is having an entrepreneur that wants to go and look for this company. And this entrepreneur has to have specific or very good qualifications. And there is not so many of them coming and doing this. There are, but there is not so many coming and doing it. So I don't see a huge, let's say, influx of that, although it's growing. So that's one element that I don't think it will fly quickly. The second thing is, we talked about it a lot, which is the financing. The governments should give search funds a thought, because many of the investors of search funds come from outside Africa. Some will be from Africa naturally, because the Europeans will not want to invest in a country with no investor from the same country. But maybe 2/3 will be from outside the country, which is FDI that countries in Africa need dearly. Now, if they are able to have the banks understand the model and have the banks help in financing, it will help a lot. So that's the other point, which is not yet developed and takes some time. I hope not so much time, but it will take some time. The third one is simply the difficulty of finding a right business that is not too complex in this bracket, in this size. 1 to 5 million euros EBITDA is a lot, and the European investors are looking for companies in this range. So you need to find companies in this range, which of course exist, but you need to find companies that also fit the model, that are not too complex to manage, have recurring revenue, et cetera, which means the pool of companies is not as big as you find in the West. So I think search funds have a huge potential, is very much needed. But unfortunately, the infrastructure, let's say, or the ecosystem will take some time to develop. And that's not only Africa, by the way. This is all developing countries. So Africa is not that much behind other Asian or, other Latin America is in the developing world is maybe the most advanced because of its proximity to the US, because there is a lot of people who study in the US, then go to Latin America to do search funds. But other than the US and Canada and Western Europe, all the other countries are still developing fast. So Africa is on the same map, but I think it will take some time to really explode. But hopefully we see it soon because Africa needs it. There is a lot of SMEs, good SMEs.
Brilliant. So where do you see yourself in Moonbase Capital in 5 years' time? What are your long-term goals and aspirations in Africa?
We hope to start working in Africa heavily. I hope that within the next 5 years, we will see more and more entrepreneurs in Africa, and we will hopefully start working more and more in buying companies in Africa. Currently, we are focused more on Europe, and the reason is because the search fund world in Europe is very developed. So as a young company that's only been existing for two or 3 years, it's good to be somewhere which is already developed, so you reduce the risks you have. But in the future, for sure, we want to focus a lot on developing world, especially that we come from the developing world and we know how to do business in the developing world quite well. So it makes sense that we invest in there. And there's a lot of potential, a lot of return that can happen in the developing world. So hopefully in the next 5 years, Moonbase will start working more and more in Africa. And me personally, I'm really emotionally connected to Africa. Let's say I like Africa a lot. I even in my football, I'm either cheering for Nigeria or Ghana or Egypt. So for me, I'm quite African at heart. So let's see. Hopefully, Moonbase will land in Africa soon and grow in Africa. I hope.
Brilliant. I hope so too, because you've totally sold me on the idea of search funds. So it's something that I look forward to seeing grow on the continent.
I hope so too. Let's keep our fingers crossed.
As people, we often have quotes, mantras, proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
Yeah, keep walking. In anything I do, if life is hard, close your eyes, keep walking. And usually it solves itself. So keep walking is mine.
Yes, I guess. Keep on moving, keep things going, keep walking. Brilliant. I like that one. Thank you for sharing that.
My pleasure.
As we're coming to the end of today's conversation, I was wondering if you have any closing remarks, final calls to action for people who are interested in search funds or the work that you're doing at Moonbase Capital.
Please visit our website if you're interested. We have a lot of resources you can read about search funds, and search funds is brilliant. So I invite everyone to consider it either as an investor or as a searcher or as an SME that you want to sell your company. And my final remark is I'm really happy with this podcast because we need to all focus more on Africa as Africans. And I'm really happy to have this discussion and to hopefully inspire some people in Africa to take this route. And this could be a step forward, a big step actually forward in search funds for Africa. So I really have to thank you from the bottom of my heart for this very nice discussion. Thank you so much.
It's been a pleasure having you on the podcast. Thank you for joining me today and sharing your insights on SME investment and Moonbase Capital's innovative approach through search fund. It's been extremely enlightening. Has definitely shed some light in terms of the intersection of entrepreneurship, investment, and the business landscape. And I look forward to seeing more search funds on the continent in the near future.
Thank you so much. Thank you for your meeting.
Fantastic. And we will speak soon, Ibrahim.
Thank you. Bye, Taxi. Bye-bye.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.